Greetings everyone, welcome aboard. Joseph James, SchoolOfTrade.com. Today was July 16th, 2010. Finally Friday, OPEX Friday today. We made it through it, guys. I didn't think we would earlier on this week, right? Summertime trading this week, right? Kind of the first week back after the 4th of July holiday. And boy, we're really feeling the summertime market slowing down a little bit. OPEX week this week. Before we talk about the trades we took today though, guys, I want to remind you, chances are good you're watching this video on our blog right now. Now, if you're on the blog right now, guys, there's a bunch of great stuff you want to be aware of. First of all, in the lower right-hand corner, go ahead and follow this blog. Now, you'll need your own account with Blogger, so create your own account, then follow this blog. That way you get every new update we put on there. We put a new article on tape reading up last night. We put a video on tape reading up last night. We made 4 different winning trade calls today on the blog. So follow the blog, that way you always get all the current real-time information as it's posted on there. As you can see though, you can also of course look at our YouTube page, follow us on Twitter, or join our Facebook fan club. That way you can of course get all the great stuff that happens there. And we also have 24/7 live support. So there's someone standing by right now to help you guys if you have any questions. And then don't forget, in the upper right-hand corner, if you have questions about a specific topic, you can always search for any topic. You want to know more about the MACD divergence? Want to know more about double tops? How about how to trade a sideways market? Right, guys? Use that search box, and that will get you guys going in the right direction. Don't forget, though, we've put a great list of handy videos under Trade Room Resources. Right? Trade Room Resources, that's probably where you should go first. All right, guys? Let's keep moving. We took 6 total trades. Last trade was a loss. We had over 100 ticks in our pocket. We gave back just shy of 100 ticks today, guys. And another great Friday here in the live trade room. Now look at these results for this month of July so far. $7,400 for the first week. $6,200 for the second week, guys. It's going to start slowing down here a little bit towards the end of the month this month. But guys, what a great start to July. Summertime trading. If this is what it's going to look like the rest of summer, guys, we'll take this all day long. We traded gold, crude, and the Russell today. What's the most important thing that happened today? Well, today was OPEX, right? The third Friday of the month. Now remember, guys, if the first day of the month it's a Friday, then it's the 4th Friday of the month. All right. Of course, that didn't happen this month though. So today was OPEX Friday, the 3rd Friday of the month. Options expire on Saturday, and of course today is the last trading day. So hence why traders are getting their work done today. As usual, summertime trading, we saw a slow at the open. We had wedge patterns, red pace of tape, right? Slow, sloppy, right? Choppy markets. We had news at 8:30 this morning, and that news at 8:30 kind of sparked this whole thing moving this morning. So we actually got about 45 minutes of really strong price action at about 8:30 this morning, but then that quickly trickled off. And of course, right, we made a bunch of money on gold today. Right, gold was really our bread and butter today. And let's start out with review today on the gold market. Now, guys, as you're going to see here, the gold here trading in a sideways range. Now, we spent a bunch of time today talking about sideways trading on gold. And so we know, of course, when it comes to a sideways range here, right, we define that sideways range. And then once we define that sideways range, we're then going to look to sell the highs and buy the lows, right? So sell the highs, right? And then, of course, we'll buy the lows. All right? So sideways range, we want to make sure we first define the sideways range, right? Double tops and double bottoms. You can also use your red lines, right? Your auto levels will define that sideways range. And then once you define the sideways range, then you can begin looking for patterns inside the range. All right? Now, oftentimes what will happen is, like you see here up top, right? We're going to break out of the sideways range. But then if you follow me back down here, this is what happened about 15 minutes after that, right? It broke out to the upside, and then it retreats right back down in. Okay, so oftentimes, guys, we'll see price that will get a little bit outside the range, but then it will begin to then, right, get pushed right back down in. So again, our goal is to buy the lows and sell the highs. And remember, guys, if you see it try to break out to the upside or the downside, it may not be, right, it may not actually have that full breakout. It may just be a little fake out breakout, right? And then it'll come tumbling right back down into the sideways bracket. So that was a great example of what we're seeing today on the gold when we first opened up our charts. Now, whenever I see a sideways market, I'm always thinking to myself, right, yes, because sideways markets are always, I think, to be the easiest markets to trade. Now, with a sideways market, we know exactly where our highs are, We know exactly where our lows are. We know where our targets and our stops should be placed. In a trending market, we have a lot more guessing to do, right? Trending markets are a lot more impulsive. And usually on trending markets, we have them happening on lower volume. So in a sideways market, it's going to give us a little bit more of a well-structured trade here. And so the first trade of the day came right at the highs here. Okay, so once again, we're going to sell these highs, right? So here's my high. I'm going to sell those highs, right, looking for my two-step pattern short. So we come up, we're going to bounce off the high up top here, and we're going to break back to the downside, right, off those highs. The first trade of the day here, 8:34, just after the news came out. This is a two-step pattern short. 93.7 was the fill. We took our first target at +4, took 2 off at +4. We took 1 off at 8, 1 off at 1, 17 ticks, or 170 USD for our first trade of the morning here on gold. So we were trying to get this gold market right here, as you can see. We were trying to get this thing to tumble all the way back to the downside here. It did end up doing that, but a little bit later on this morning. Let's keep moving. We got 17 ticks by selling the high on this sideways range. Let's see what else comes up our way here. Now we're going to go over to crude now. Our second trade here at 9 o'clock was on crude. But before we talk about the crude trade, though, let me show you guys what we saw here on crude.